I'll say Holly.
All right, thank you. I'd like to welcome everybody to this morning's meeting of the Finance and Audit Committee. And I'd like to call the meeting to order. It's now 9:03 a.m. Stephanie, will you please take attendance?
Of course, good morning, everyone. Adrian Cochran has not joined us.
Present, I'm right here.
Oh, I'm sorry. I'm so sorry.
Me and the orange and white.
Andrea Comer.
Present.
Ellen will not be joining us. John Scott. I don't think he's joined us yet. Mike Soltis will not be joining us today, and Holly Williams.
Present.
Okay, we do not have a quorum.
Thank you. I would like to welcome and thank any members of the public who are joining us this morning. We are going to jump over the review and approval of the July 28th, 2023 meeting minutes and move on to a fund recovery update that Walter is going to give us this morning.
Thank you, Holly. And hopefully sharing my presentation. The fund recovery update. So in early July, we did kick off our non-compliance outreach. Those employers that existed in our system that had either not submitted a return filing, a contribution payment, or a combination of both. When we sent out those notices in July, we sent out approximately 24,000 notices to employers. Since that outreach started 7 weeks ago, we've received both information to update our system and as well as receiving payments from past due contributions. To date from this outreach and the case response management, we've received information to update 1,477 accounts in our system to denote a business status change, to note that while it was registered originally, there has either been new information to close that business. That business no longer has Connecticut employees in the state of Connecticut. There were some duplicate accounts created as well. So the biggest trend that we've seen is really the closure of accounts. Accounts had closed either their business in the year of 2021 or 2022. After they registered for their business, they completed the filing up to that point of closure. We just did not have the information at that time to close out the business. And then since then, we've also received payments from 1,823 employers as of yesterday, August 24th. 1,346 of those payments for employers were submitted in the month of July for $373,727.04. $284,868 of that was for contributions, $3,991 for interest, and then $84,868 for penalty. So far in the month of August, we have received an additional 477 payments from employers for $111,270 in contributions, $2,412 in interest, and $30,215 in penalty. So to date from our fund recovery notices 7 weeks ago, we've received $517,625 from that notice outreach. In addition to these contribution payments for Q1, we've also seen, as a result of that, additional contributions being paid to us for prior periods for a little over $200,000. And then currently, we have in early September notices for Q2 of 2023 scheduled to go out. We're still reviewing the outreach to finalize our current responses from Q1 before Q2's notices go out, so that all of those business status updates can be reflected in our system. Before we do send out those Q2 notices, we want to make sure that we do hear the employers, listen to them, and update our accounts accordingly, so they do not get a notice for another period if we already have that information to close them out in our system. Lastly, what this notice outreach has really helped us to do is work with our third-party administrator or TPA community, the Department of Labor and Department of Revenue Service, to review those accounts in our system and compare it with all of those entities. Based on this review, we've actually been working on some data corrections in our system to update approximately 3,600 employer accounts to denote their closed status. Those employers haven't told us they're closed yet, but we did receive that information. We've confirmed it with our filing history, and it is aligned with both DOL and DRS to indicate those businesses are no longer in operation. We have additionally sent reports to our TPA community based on who received that Q1 of 2023 notice, and they are working to validate those reports to ensure they submitted all of the right employers to us, and they're working on updating their enrollment files. And we're still vetting some internal updates to our system where some of those TPAs might have given us an enrollment file for an employer that may not be part of our program. So we're working on vetting that. We should start to see some responses from that TPA community soon, and then we will make those updates to our system. I'm just going to pause here in case anyone has any questions based on the information on the screen and the numbers and from our responses. And then after this, I'll walk on over kind of our fund recovery response from all of that outreach back to us from our employers. And no questions. So 7 weeks ago, we did send out our notices to approximately 24,000 employers. To date, from that notice outreach, we did receive 3,651 contact us case submissions through yesterday, where employers reached out to us to either confirm why they got a notice, dispute that notice, or ask questions about how to file and pay, remit those funds, and create a contact record in our account. So in the month of July alone, we did receive 2,867 cases. And then so far in August, we've received a total of 784 cases. So we've been able to work and close 1,820 of those cases so far. We have additional 324 cases in which we've received either a valid dispute of the notice, or we're processing the waiver of the penalty, or some requests for reconsideration for employers who don't feel they are owed a penalty, and they're telling us why and providing some supporting documentation and backup. So far from that, we do see that a majority, 90% of that disputes are valid disputes of our notice. And then we currently have 250 cases that we are currently assigned to our finance team and our two temps who are reviewing the responses. We have additional 856 cases where we reached out to the employer. We provided them some knowledge articles, some guidance on what additional documentation or support we would need. And we're just waiting some information back from them before we can action the next step of that case and then close it out and make a necessary either correction in our system or just close out that case in general. We additionally have 236 cases that we have worked and actually closed the case where the contact has since replied to us to reopen the case. So we will start going back through that and verifying that no additional action is needed and close as necessary or action as appropriate. And lastly, we have 165 new cases that we haven't worked yet. We're currently caught up to last week on new submissions. So we have actioned everything that has come to us prior to last week. We are caught up to Wednesday's case submissions. And now we're transitioning to review those past cases where we're pending an employer response or those that have been replied to us so that we can ensure that by the end of next week, we have closed out all of our notice received to date for that Q1 2023 outreach ahead of our Q2 notices going out. In our queue management currently, we've seen that we worked 3,214 cases and provided 11,091 actions or updates to cases. This roughly translates to us having 3.5 actions per case. So it means we are having to touch that case multiple times and working with that employer. Based on those trends, we are trying to take the necessary updates to what messaging we do send back to that employer to hopefully cut down that need to have back and forth to have a more concise and streamlined approach. And then when we review those cases for pending employer responses, as well as those cases we actioned before, we will start to see that number go up to approximately 4 actions per case. So that is kind of our progress so far. We're able to provide about 271 actions per day and action 80 cases. So that means we can take 80 cases out of our new status, review it, provide updates, send out correspondence. And then we've actually seen some trends where we've improved upon that. If I look at our last week alone, we've actioned 343 actions or updates to cases per day. And we've actually responded to and worked 176 cases per day. So we've made some updates to our system, to our process, and we've been able to improve on this performance from our first week starting in that queue. The last item I just wanted to highlight from our notice outreach is that since we've sent out these notices, we've also received an additional 858 contacts being added to those employer accounts that existed in our system in Q1 of 2023 or prior. So this means that that employer community is getting registered to that employer contact, where through that batch process of enrollment, we don't ask for that registered contact field. So people are now getting registered and receiving our updated communication, which should also help our next notices. If that employer does become non-compliant, they will now get an email notice to them. The notice outreach has also caused an uptick of additional data corrections, more employers completing their registration, and this should also help our, with that being said, help our benefit outreach too. So we have HR contacts, registered on a contact role that our AFLAC team can help to validate a claim against. That concludes my review of our notice or case activity. Does anyone have any questions about the fund recovery efforts?
I don't see any.
So I will stop sharing my screen.
Thank you. So we're going to move on to our budget review of spending to date. So Dave, if you want to take us through that.
Will do. Thank you, Holly. And good morning, everybody. My turn to share.
Your screen, Dave.
Thank you very much for the verification, as always, Stephanie. Okay, so we're going to go over the financial results for the month of July. That is the beginning of our fiscal year. So we will be showing, so since the month to date information is the same as the year to date, we're not going to show you an additional column with the same information. So if the reports look smaller than usual, that's why. So for the month of July, our spending was just over $800,000. That's $370,000 better than budget. Now, if you look at the income less expenses, you may notice that there's a $4.5 million negative variance. So you may be saying, well, what happened to the revenue side? Well, it's a new quarter. And normally we would have the CTPL administrative fee that would be transferred over from the contribution budget to the operational budget. But we still have enough money in our operational reserves for our operational expenses for the next quarter. So we have not transferred over the $5 million over this quarter yet. That doesn't mean we have a shortfall of $5 million anywhere. It just means we haven't transferred the $5 million over from contributions to operations, like I said. And you'll see that positive variance in the contribution budget when I show you later. But just in case anyone is alarmed by that, they should not be. It's just a cash transfer that we didn't need to make yet because we had the money. Having said that, out of the $800,000 we did spend in July, 567 of that was payroll and related expenses. 128,000 was for the contact center, and about 30,000 was for our outreach efforts. Moving on to our bond funds, we spent over $51,000 in bond funds for the month. Some on fund recovery, and some on our claims integration work we're doing. We did spend less on we did spend $148,000 less than we anticipated for the month. So we are running positive to budget so far for bond funds. Out of the $60 million we have allocated, we have just over $2.7 million remaining to the authority that we can spend. Moving on to, bear with me 1 second. There we go. While my screen does funny things. Okay, our contribution activity for the month was a positive $83.4 million. That's almost $14.5 million better than budget. So starting at the top, we got $109.6 million of contributions this month. This is the month when contributions come in. The contributions, as most of you are aware, are due at quarter end with a grace period for the month after. Most of the contributions come in during that grace period. And so since July was the grace period, that's when the money came in. For the quarter ended, our contributions were $110.9 million. And I'll get to more on quarterly trends in a couple of minutes. But we're about $4.2 million ahead of budget for contributions revenue. So we're starting off on the right foot. Our fund recovery activity, Walter went over that already. For the month of July, it was over $288,000. That resulted in a positive variance as well, because we budgeted pretty conservatively in terms of what our expectations were for fund recovery. Investment income was $2.1 million. That also has a positive variance because the actual rate of over 5% was more than the rate we had budgeted. Moving on to expenses, the benefits we paid for July were $26.7 million. That averages out to about $6.7 million a week. We are seeing an uptick in the amount of money we're paying for benefits. We've had some weeks where we've actually paid over $7 million. And so we are starting to see an increase in the benefits out, which is good. People are using the program. But like I said, that did result in a positive variance of $4.4 million. There's also the $5 million variance I talked about before because we didn't transfer the administrative fee. So that was part of it. And so all that resulted in the positive variance that I started at the top of this discussion for the contribution budget. The contribution fund has $581.7 million in it, again, driven by contributions. We have received over $1 billion in contributions so far. So that's a landmark for us. And we've paid out almost $426.5 million in benefits that we started paying out a year after we started collecting contributions. Quick look at the balance sheet, almost $600 million in assets. And the largest asset, of course, is the short-term investment fund account, which has $561.6 million. The operating funds had almost $10 million in there. And so that's why we didn't transfer the $5 million, because that should be enough for the next quarter of operational expense. The one other thing I wanted to show you was how we look in terms of quarterly trends. And this encompasses everything since the authority started collecting contributions back in 2021. So the green bars represent the balance of the contribution fund at the end of a quarter. Actually, at the end of the grace period. So that would be April, July, October, January. So those are the 3-month periods ending that month. The blue row represents the contributions coming in. So you can see there's certain quarters where they peak, and that's always the first quarter of the year when the contributions are the highest. And then they typically start going down until the new year starts. And then the dark orange line represents contributions, which was 0 for the first year because we didn't pay any as the program was designed to be, so we could build up a balance in the fund. And then since then, it's been pretty steady, although in the past couple of quarters, it has started to go up slowly. So we're taking a look at that and seeing if that trend continues. And then the last line on the bottom, the peach line, represents our operational expenses, which is pretty small when compared to the amount of benefits we're paying. And that per quarter can usually averages around $8 million a quarter, rather $11 million a quarter. Although the last quarter, since we didn't transfer the administrative fee, it's been closer to 5. But this just gives a snapshot of financially how the authority has been running since the program started collecting contributions. That's it for my prepared statements for the month of July. Does anybody have any questions?
I don't see any.
Okay. Well, thank you for your time, everybody. I appreciate that.
Thank you very much, Dave. And actually, we're going to go back up to number 2 on our agenda now that we have a quorum. And I'm going to ask for the committee for a review of the July 28th, 2023 minutes and a call to approve.
A motion to approve.
I'll second.
Thank you. All those in favor?
Aye.
Aye. Any opposed? Any abstentions?
Abstention.
Thank you. Noted. All right. So the motion carries. Thank you, everybody. Now, on to number 5. Is there any old business that anybody would like to discuss today? Any new business? Not seeing any. All right. Well, then can I have a motion to adjourn?
So moved.
Thank you. And a second?
Second.
All those in favor?
Aye.
Aye.
Aye. Any opposed? Any abstentions? All right, the motion carries. It is 9:26 a.m. and the meeting is adjourned. Have a nice weekend, everyone. You get some time back this morning.
Very good.
Thank you.
Enjoy.
Have a good
Bye.
weekend.